Hey everyone, I've got some great info lined up for you this month with this month video report. So without further ado, I'm going to share my screen. We haven't met. My name's Gary Nims. I'm with Windermere Real Estate. Here we go. This time we're going to start with Seattle. Okay. So here's what's happening in Seattle right now. Um, so our March 10-year average, we normally have about 900 listings that are taken in March. We're down about 15% from that. So not far off. Number of pending transactions is down 27%. Number of closed sales down as well. Obviously, because we just have less inventory. So one thing is prices rose the first 4 months. Over the last 4 years, 2024 is trending upward as well. Here through March, our median price is $925, and up 75,000 from January 1st median price. Haven't quite broken that $1 million median price yet. We almost did back in April 2022. Something I wanted to show you as well. This is a little chart that shows how many homes sell above the list price. And here we're sitting about 37% here in March. We're ahead of 2023. So I've got some big news that's happened on the east side, and I'm really excited to show you this. We had the largest month-over-month increase on record. So the east side median closed sales price increased $212,500 or 14.5%. And of course, if you have the highest increase, you got to know what the second and the third increase is. The second highest was 182,000 from January to February in 2022. That was the old record that we just broke. Third highest was 87,000 from November to December in 2017. I remember that market. Just a few bullet points. So the east side median closed sales price, now it just reached $1,682,500 or $40,000 below our all-time high of 17,225 from April 2022. 53%, and next item, 53% of homes sold in multiple offers, with the sales price on average reaching a median of 9% above the list price. May of 2022 was the last time either of those was higher, with 66% of homes selling in multiple offers, and the purchase price exceeding the original list price by 11%. Next item, prices increased as if interest rates had dropped 1 full point, down below 6%, but they did not. So there was little change by the end of the month. In March, our 30-year fixed rate ended the month around 6.8. But the big story is history repeats itself. Prices rose the first 4 months of 2021, 22, 23, and now 24. And here's a little graph that we put together. So a 14% increase, 14 and a half, 212,000 increase month over month. So inventory levels remain low. There's 367 homes for sale at the end of the month. Our March's 10-year average is about $685,000. And then one thing I wanted to show you was the correlation between interest rates and median price. So we would talk about this, but I can't stand when, as realtors, we just make these shoot from the hip generalities and we don't support it with numbers. Call me overly analytical, so be it. I am. Interest rates, our month average, median closed sales price, and then we're going to talk about principal and interest based on the above, and then we'll be done. So the lowest interest, well, let's talk about the highest. The highest interest rate that we hit, median for the month 6.6 or 7.58, and then the lowest median price was the following month. One thing you want to remember is these homes, when they close, they get negotiated 30 days prior, typically. So lowest price. Then we have the lowest interest rates. And here, that was just setting us up because we had some stability in the interest rates below 7% here, December through March. And now, I don't know if you looked at what interest rates have done just this last week. Don't look unless you need to, but don't look right now. They're about over 7. But that set us up for the all-time, highest median price. So then the other thing I wanted to show you was we generally have been falling between an average payment between $9,000 and $10,000 a month, and here we broke this trend. So that's it. That's my video report. What is the moral to the story? I would say I'm going to stop my screen share just for a minute so I can look at you. So I would just say buyers, get ready. If we'll see more inventory later this year, we could see some price plateauing then, and then there's your chance. Don't be afraid to jump in as long as the payment works for you. And don't expect median price to drop either. There'll be some fluctuation for sure, but I've noticed one thing in human nature over the years. Buyers, we're like, hey, we're out there, we got to do it, we're gonna do it. And then when the market takes a breath, and then we don't see 50 people at an open house, we're like, oh, what's going on? Is there something wrong? Maybe we need to wait. It's that herd mentality. You trust the herd, and we don't trust the numbers. Yes, buying a home is emotional, but we use emotion. Emotion is best used to fuel you, and then use market statistics to guide you. Remember that 10-year study that Windermere did a couple of years back that I talk about sometimes? 82% of the annual appreciation in a home, it comes in the first 6 months of the year. In other words, if a home appreciated by 10% in any given year, 8.2% of that appreciation, it happened from January 1st to June 30th. That was the average in that study. So that's my monthly video report. I hope you enjoyed it. And I'm just to say in closing, as maybe some bonus material. I remember when my wife and I bought our first house. It was in Houghton. It was in the Kirkland area. We paid $312,000 for it. It was all we could do to stretch to get our first home. It was a fixer. I was the man for the job. Remodel by day, then come home and remodel by night. It was 24 years ago. We had a terrible sense of design. We had no design sense. And I was looking back at our finishing choices. If we'd had the funds, we'd have done way better by hiring a good designer. But we stretched. We took a little risk. Lending was a bit easier back then before the lending reform of the Great Recession. But it's a great memory. We have some great memories in that house. Laura and Caleb's early birthday parties. I wouldn't trade that for anything. Real estate, it's not just an amazing investment. It's a place to build memories, to hang some pictures on the wall. It's to strengthen family bonds. And it has made us millionaires, and it's given us financial stability these past 20 plus years, so that we have the opportunity, maybe just the opportunity to think about legacies. What can we do for loved ones and for the world, even after I'm gone? Don't worry, I don't expect to be leaving soon, but let's live knowing that our tomorrow is never guaranteed. And at the same time, we could have decades ahead of us. I hope we do. And I'm just trying to make decisions with either of those scenarios in mind. So as far as investments go, Bitcoin might go up, might go down. From my research, I think it's going to go up, but the S&P 500, that's going to fluctuate. Real estate in the Pacific Northwest, it's a fantastic base. And I would say outside of the advantages of employer matching, if you happen to have that, it's the best long-term investment that we can use and enjoy every day. So, hey, I'm here to help you provide some advice so that you'll enjoy both the incredible financial aspects of real estate as well as the personal fulfillment in it as well. Always more to come. Thanks so much for watching. Take care.